As per reports, layoffs in the United States in January and February this year were the highest since 2009, out of which more than a third of over 180,000 job cuts announced by US companies in January and February were in the tech sector. Tech sector layoffs are predicted to continue. What will be the impact of this on the global economy? And to discuss this, we have with us Michael Owen, President of US Global Center for Cyber Policy. Thank you so much for joining us.
You're welcome. Happy to be here.
My first question to you, layoffs in the United States at their highest since 2009, as I mentioned. What's your assessment of the situation, and what do you think has triggered these string of mass layoffs?
You know, it's unfortunate, first of all, that we have these string of layoffs. But what we can say mostly is it seems to be tied to shareholder value and increasing stock prices. You know, we went through a period as to where a lot of these tech companies have grown and grown at rapid pace. But what we know is that the shedding of these jobs almost seems like dominoes falling over after one company after another does it. Even those companies that are actually doing well and making tremendous amount of profit still find themselves in situations where they're cutting jobs. So, you know, the more we looked at this, we see that it has generally been tied to, again, shareholder value and being able to, in a short term, be able to bump up profitability, because a lot of these companies we've seen, after they've made these cuts in employees, that their stock price has indeed gone up.
All right. Now, as I mentioned, tech sector accounts for over a third of the job cuts here. Why do you think the layoffs have been concentrated particularly on the technology sector?
You know, I think once you just hone in on a certain area, look, we've seen this before with, you know, .com boom to go back, you know, further in history. But a lot of people have seen this as a sector that's been bloated, that has a lot of employees. We also have to think about, we're now, you know, have gone through the pandemic with COVID, and we found that a lot of employees working remotely and the different changes that people have seen, you know, in the workspace has actually led several CEOs to believe that they could actually, you know, do the same amount of performance with even less people. So I think that there's some thought there that on one hand, that companies have been bloated, they've hired way too many people, as you know, stocks and as companies have made a lot more money, that they've added more staff they can now get rid of and still keep the same level of performance. That has yet to be seen.
All right. Now, as per reports, the job cuts, they are expected to continue. We already see them spilling into the finance and retail sector. What's your take on that?
Well, I mean, the first simple aspect of that is within the finance sector and several others, you've seen the same growth of tech staff within those. So you're still talking about people, you know, developers, system engineers, UI folks, security people. So while you're seeing this in other sectors now, you're still seeing this strongly with people within the IT backgrounds and IT roles.
Right, absolutely. Now, just for more clarity on this, tech companies, Microsoft, Google parent, Alphabet, PayPal Holdings, they've cut thousands of jobs this year. This is an effort to curb spending and protect margins amid an uncertain economic outlook. Would you say that the mass layoffs, that's an effective strategy?
I don't think it's an effective strategy. I understand what's happening, but if you look at research, it's twofold. On one hand, it does show that there is a short-term bump because it sounds good on your quarterly earnings call, right? When the investors are calling and saying, hey, what's going on? You cutting staff is a quick way to show a boost in your bottom line, because you're literally cutting staff. However, research has shown in the long term aspect of this, it does not help. We know that there's problems when these cuts are made, mainly dealing with employee engagement, dealing with uncertainty and morale issues around the workplace. So just because you cut staff, you know, the existing staff that remains there, potentially your ability to go out and recruit in the future is diminished, which therefore can cause some long-term financial problems and issues around innovation and engagement as well.
Right, absolutely. We have seen how restaffing can prove to be an issue as well. We will come to that in a second. Now, we've seen how the pandemic, as you mentioned earlier as well, has altered perceptions when it comes to jobs. Do you think that it's perhaps time for companies to be more open to flexible working options? Would you say that could somehow help businesses manage costs and also ensure better employee health in light of the economic situation?
No doubt. I think, many companies have proven not only can they survive in a majority workforce that is distributed or work from home, but they've also been able to keep up profits and even grow profits. So the idea that what the pandemic has taught us is that this is still capable and possible to do, but also, from the aspects of the pandemic and looking now at ways to slash and cut workers. A lot of these companies, depending on if they own buildings where they've invested a lot of money into the brick and mortar and they want people to stay in there, but also companies I think are finding out if they don't have that huge outlay in infrastructure, that they can have more distributed workforce, still be able to produce at a high level, top quality, and lower the overall cost, which therefore could keep more employees and keep more people employed.
All right. Now, as per analysts, some say that this restructuring and layoffs, they've been welcomed by investors. Why do you think that is?
Again, it's a simple numbers game. It's about if we can make the bottom line look better and make it look like the product or services are more profitable, then again, that sounds good on an earnings call. It looks good on Wall Street. It's ultimately going to make the stock price go up. So I think CEOs to some extent has been conditioned to this now, whereas instead of looking at other areas they may be able to utilize to make their company look better or make their performance look better, they're taking the easy short route, which is basically cutting jobs so they can make their bottom line look better.
All right. Now, of course, these trends, they've stoked recession fears as well. What do you reckon lies ahead?
Again, like I mentioned earlier, it's just kind of like a domino effect where we're seeing companies across the board slashing and slashing. I think, though, that there is competitive advantages that are going on out there. Because, look, for a long time, we've had an employee market out there where wages have been going up. Remote working had become somewhat of the norm. Now there's been a push to go back to the office, return to the office, if you will. And so there's a clash, there's a dichotomy that's kind of going on right now between workers or between employees and employers. And time is going to tell, who's ultimately going to win at this. But, the looming recession is large. And I think that ultimately employees will continue to search the job market. Not only have we seen this great cut in forced reduction of labor, but you've also seen a lot of people leave their employer willingly to go to other companies that are willing to allow them to keep working from home or willing to pay more money. We have to keep an eye on that as well.
All right. Now, in case of the United States, Federal Reserve Chair Jerome Powell has reaffirmed higher, potentially faster interest rate hikes, which could force companies to slash more jobs, as you mentioned as well. So what's your assessment of this?
That's kind of the big unknown. I think one large piece of this is consumer confidence, right? And along with that is employee confidence. If people feel good and feel that they have a job that is going to be there, and they feel good about where the economy is heading, people are more apt to spend. So when you combine those together, it really is what becomes a driving force of the market. When either one of those start to pull back, times get really tough. And I think right now, people are keeping a keen eye, as we go into Q2 of 2023 about exactly where they are. I think if we can get some slowdown of these job cuts, then that will do a lot to make people feel more comfortable about where the market's going and hopefully get people to spending more.
Right. Now, you'd mentioned restaffing issues earlier. We've also heard of other trends like labor hoarding, career cushioning. Would you say those can be used as a shield for employees who may be at risk of losing their jobs?
It's possible. I think that we will see where that goes. But at the moment, we're not sure.
Right. And finally, with layoffs set to continue, what do you think will be the impact of this on the global economy?
Well, I mean, the question is, how far will this spread? We've seen this obviously in the U.S., but these are large multinational corporations we're talking about. They're not just U.S. companies. They're large companies that have a large amount of global workforce, as well as sell their hardware, services, software across the globe. So there's no doubt that, as this kind of continues, there will be a rippling effect across the workplace and across the global sphere if this continues.
All right. Well, Mr. Michael Owen, thank you so much for joining us with all your insights on this.
You're welcome. Thank you. I appreciate it.